In today's episode, we're going to be talking about the government shutdown and how it affects the real estate market, specifically real estate loans. The good news is that we had a government shutdown right around 2018, 2019, so it's nothing new. At the same time, I wanted to bring on a mortgage professional that has dealt with this in the past, and I wanted to get his insight, his opinions as to what adjustments his company is making, and then also like what can we expect from the real estate industry from mortgage loans. Welcome back to the podcast, Silverio. How are you?
Doing great, thank you. Thank you for having me one more time, Jose Luis. Absolutely, this is nothing new to us. In our short lifetime, we've only seen this happen once, like you said, in 2018. And it sure made, some serious waves back then. We're sincerely not expecting it to be as harsh this time around because we've been there before. But again, it's really important for the consumer to know what to expect if you are either in escrow now or you're about to get into escrow soon. And primarily, if you are a government employee, this may have, obviously additional implications.
Got it. Okay. So especially if you're a government employee, basically. So let me ask you this, like, assuming that how would it impact if you're a government employee? It basically means that you can't basically buy right now if you're a government employee because you're going to be laid off. Very likely.
I guess that's the worst part of it, right? I'm hoping that does not happen, because if it does, then we have a much bigger problem. But, certainly there are certain organizations that are extremely imperative for a mortgage consumer to utilize, or a mortgage lender to utilize when we are dealing with a mortgage. For example, let's talk about one big one. A little bit off, before we started this podcast, I was sharing with you that the National Flood Insurance Program, also known as the NFIP, it's a big item here for us because, in some places in California, we have flood insurance that is needed. But if you are in a flood zone right now and you are going through the process of a loan and this organization shuts down, we may have a big problem because we did not see any exceptions back in 2018 for flood insurances. So how is this going to delay? Let's assume for a second, we are located in Ventura County, California, and there are a few places in which they do require flood insurance. Let's assume that you are in one of those properties. You go and, your offer gets accepted, your loan gets accepted, but all of a sudden you're not able to provide or furnish any, flood insurance. This could delay the process can be delayed a few days, few weeks. I don't know. I from what I remember and talked to you about, earlier, Jose Luis, I think the last time it took 35 days, and right now we have no idea how long it could take.
Got it. So basically, there are some challenges associated with doing loans when there's a government shutdown, if I'm understanding you correctly, because there are certain things that we need from the government in order to be able to get the loan closed. So At this point, it's too late almost like to pre-order it, right? Like meaning or let me ask you this. Do we know if the NFIP is going to be shut down? If they aren't going to be shut down, do we know that yet?
We know that there's going to be a lot of cuts and they're going to be short staffed. That's as far as we know as of today, which is obviously October 1st. We don't know what's going to happen in the next few days. The few things that are very important for us to take into consideration are as follows. Out of the government-sponsored enterprises that will be affected by this would be verifications of employment, for example. If you are employed by a federal government, both Fannie Mae and Freddie Mac will allow, for verifications of employment that could be, alternate to your normal ones. For example, if you have a verification of employment that is automated, more than likely we're not going to see a problem with that because we're hoping that the automated systems will continue to work. But let's assume that we are doing a verification of employment through the county of Ventura, just as an example, and we are required to have a physical written verification of employment and nobody's working on that, then it could actually delay the process.
And the verification of employment is basically like one of the last steps, basically. It's almost like you have it all the way through, and basically that's like one of the last steps. And
that's a great topic. Yeah. Let me just no. It is actually the first step, Jose Luis. In order for us to do a pre-qualification, we want to have a verification of employment up front, but there is a re-verification of employment that takes place an average no less than 10 days prior to closing and no less than 3 days. So within the last 10 days of the loan, we have to do a re-verification of employment to make sure that the actual employee is still employed.
Now, if this is not possible to do, what would happen to the loan in that case? Like, let's say the government shut down for 30 days.
Let's assume that is the case. A lot of lenders have already lived and gone through this process before. So in some cases, we were able to utilize, most current paycheck stubs. We were able to utilize emails from an actual, employer, not necessarily human resources, maybe a direct supervisor. There were many things that we were able to do in the past, but again, the last time it was only 35 days, so it wasn't a dramatic deal. But, like I said, I'm not really quite sure how long this will last. The other big one that we need to take into consideration is tax transcripts. So most lenders, would require tax transcripts unless you're choosing a product that doesn't require it. And if the IRS is not working or we're not able to get those transcripts, that could be also another big problem. Verification of Social Securities is another one, because if the Social Security Administration office is not working and we're not able to automatically verify the Social Security numbers, that could also be, a problem. And again, we discussed, providing proof of, flood insurance, could also be, another big topic there.
Got it. So if I'm hearing you correctly, for the VOI, there was some workarounds around that. What about for tax transcripts? Were there any workarounds the last time? And then also for verification of Social Security, were there any workarounds the last time as well, too?
For the most part, we are able to furnish a copy of the Social Security, card. A lot of people don't have that, Jose Luis, unfortunately, so that could be one option. With regards to the verifications of employment, as you mentioned, there are a few other options. For tax transcripts, after that 2018, situation, there are a large number of actual investors or lenders that would allow you to not have the actual 4506s, but this will all depend on the lender that you're working with and the type of loan that you're doing. Right now, primarily, we're focused more on this conversation with government loans, such as USDA, VA, and FHA. But again, there are some lenders that in today's market, we are allowed to not have the tax transcripts, at all. So that would solidify a lot of the issues in that sense.
Got it. Now, let me ask you this. How is the process going to be different or affected? Like, let's say we're representing a seller, and the seller has the option of either accepting an FHA or a VA offer or a conventional offer at the present moment. How is that process different, or do you run into similar issues regardless if it's conventional or FHA or VA?
In all fairness, the longer this process takes, everything's going to be affected, right? No matter which loan you do. But as of right now, we have factual information that none of those services are currently affected yet. So, FHA, we can get FHA case numbers, CAVers, we can get mostly everything right now without any issues, because you got to remember that technology is helping us dramatically, and most of these systems are already auto-generated, in which we don't necessarily need a physical person to provide us this information unless there is obviously a rare instance in which we are required to have a physical person help us, which is really rare. So due to the fact that most of these systems are automated, Jose Luis, I don't believe that we're going to have a huge impact. Besides, flood may be the only one that can give us a little bit of extra trouble.
Got it. So basically, if your property is in a flood insurance and the NFIP has not been impacted, it's probably wise that you get it proactive about that.
Absolutely.
And order, like, like the flood report, basically. Yep. So if you have any escrows right now, or if you're considering selling your property and you know it's in a flood insurance, probably a good idea to get proactive about that, if I'm hearing you correct.
Absolutely, without a doubt. And again, anything that is related to veterans, for example, that we need a certificate of eligibility. For the most part, certificates of eligibility are automated and we can get them in a matter of seconds. But there are some, I guess, veterans that are slightly older in age, in which some of their certificates of eligibility could be archived or, a little more difficult to obtain. And if they're not auto-generated, we have to send a physical request to obtain that. So that could also be a possibility. So if you're a veteran interested in buying and you parted ways from the military many years ago, it would be important for you to log into your portal and see if you can get an automated certificate of eligibility, so you can have that handy if in case you're thinking of applying for a VA loan right now. And like I said, for FHA, the FHA case numbers, they're still being issued and they're automated as well. So I don't foresee that having much of an issue with an FHA loan either. So I don't think sellers, should be necessarily worried today. If they're choosing an FHA conventional or VA, I think everything's still going to work just because of the automation that is in place today.
Got it. That makes sense. Okay. Yeah. And then if I'm hearing you correctly, there's likely going to be some delays in the loan process overall.
In theory, it could be. But again, if your lender is proactive and, we've been receiving all this information already for at least a week or two, and, all of our investors are aware of this problem, Jose Luis, I don't sincerely think that we may have an enormous issue with delays. There will be some odd situations like we always have, in real estate, in which a specific scenario may be delayed. But I'm going to say that it's going to be very seldom. I don't believe that we will have much of a delay moving forward. But yes, there are going to be some employees, some government employees that may be affected by this. And with all due fairness, if you are in process of, purchasing a property and your employment is affected by it, that could definitely be an issue, Jose Luis, for sure.
Got it. And then the flood insurance, that may not be possible to close out a loan if it needs that specific requirement until that gets back on track.
That topic right there is probably the most difficult one, correct? Because it's a very independent, organization, and there's not a whole lot of other people that can actually provide those reports but them. So I would say. But again, let's be real about this. There's a very, very small number of communities, at least in California that I know of, that are in a flood zone. So it's going to be a very small percentage. But if you, like you said, if your property, or if you're intending to submit an offer on a property that for a fact that is in a flood zone, I would highly encourage you to be a lot more proactive. So you're not, delayed in the process.
Yeah. What was the consumer sentiment the last time that there was a shutdown? What do you recall what it was like?
Yeah, of course. Like everything else, is when there's something new and something that, it's unknown to the consumer or to us in general, even us as lenders. This is my 24th year doing this, and I obviously had no clue what was going to happen. So yeah, for sure, a lot of people get, discouraged, or at the same time, they get a little scared. Or again, if you are an employee, a government employee, and you're not really sure if your employment is at risk, it is logical that people are going to be thinking about it twice before submitting an offer. But again, in today's day and age, Jose Luis, I think that the automation and emails and everything that we have right now, it's probably going to allow us to move forward without any or much hesitation from the consumer, which we've already lived this before, and it wasn't a dramatic deal. I don't think it would be a dramatic deal again today, especially because of what I keep on telling you. It's all automated at this point in time.
So were loans still able to get done back in 2018,
Yeah,
2019?
there were certain exceptions, of course, right? Certain lenders were very worried about it, and they allowed us to close the transaction, and they basically allowed us to do a post quality control, which meant that our company had to do a lot of, a lot of post work after, gathering certain documentation and obtaining those reports that we were not able to generate. But yes, we were able to, be very successful with it for sure.
And if I'm hearing you correctly, there's going to be some different mortgage brokers and other mortgage brokers that are going to have different policies as it relates to this. Some of them may be like, hey, look, we're not doing this. We're just going to wait 30, 45 days. And other lenders may be more apt to make exceptions to kind of keep the fluidity going.
100%.
Okay.
100%. Yeah. Right now, it's truthfully going to be upon the lender and the investor itself. What risks they're willing to take and up to what point they're willing to go with this. But with all it's a broader conversation, of course. But yes, each lender is going to be very unique and independent on how they want to handle their actual portfolio while this shutdown goes through.
Got it. Did you see any impact, either positive or negative, in mortgage rates during the last government shutdown?
I sincerely cannot recall, and I was trying to do some research right around that time. But if we can go back somewhere around the year 2016 is when, for the first time, we had ever seen interest rates dip below 4%. And then probably 6 months later, right around the mid or early 2017s, interest rates went up again to the high fours, early fives, and it continued to stay around the same thing. I don't have any factual data in which interest rates went up or down during that time frame. Right now, we're living in a completely different world, Jose Luis, in which previous data doesn't seem to really apply in today's market. And before we would be able to gauge I guess data within a year, 2 or 3 years. Right now, the data that we utilize is 3 months, 4 months, back, because we have there's so many moving parts in today's markets that are impacting rates much more severely than a government shutdown. To be fair in that statement.
Got it. And then the last time there was a government shutdown, do you remember if it was less of an impact on the market at the beginning, then it got worse, and then it got better towards the end? Or was it like from the day it started causing delays, meaning like at this point we may not have a lot of information to go on? Does it change if it continues for longer?
There was a lot of fear. There was a lot of uncertainty. There was a lot of voided information that we had no idea how to navigate through that. The greatest thing about it was only 35 days. So, I mean, you have to realize that a lot of these transactions for that specific short period of time were affected. But while that was happening, we were also communicating with listing agents, selling agents, and also, the consumer and also the sellers themselves, letting them know, hey, everybody just needs to calm down. Everything will pass. Everything will move forward. We just need everybody to be patient because this is affecting everybody in the nation, not just a specific group or a specific state, if that makes sense. This is a national situation. So, I don't believe, again, that there was a huge impact personally to the consumer. It was a huge impact to us
as lenders
internally because we had no idea where to go with it.
Yeah, amazing. Well, I think the good thing is that when I looked it up, there's been several of them. I think that there was one in the 90s, there was one in 2013, there was one in 2018, 2019, and obviously this one. I did a little bit of homework. It said that it ranged from 3 days to 35 days, the most recent one being the 35 days. Obviously, we don't know how long this one's going to be. If you had to give some advice to buyers and sellers, what would that be? And then if you had to give some advice to agents and other lenders and brokers, what would that be?
So let's start with the agents and brokers. Look, like I said, we're getting a lot of information directly from higher sources. Just if you're used to reading stuff, you read more right now. Stay informed. Everything's real. There's a lot of actual information right now that you can relay. And as an agent, as a loan officer, the more informed you are, the better information you're able to relay, so you can have everybody calm down and not panic over the situation. As far as the actual buyers and sellers, look, if you need to buy or sell, you're going to do it regardless of the shutdown. This should not impact your decision on buying or selling. Yes, it can delay the process a little bit, but hey, if it takes 45 days versus 30 days to close the transaction, I've never seen anybody be affected necessarily by the situation. So, Jose Luis, I just really think that that it shouldn't be overplayed. We should continue to do business as normal. As of right now, there's no indication of any slowdown in any type of our systems that we need, because again, it's all automated. So business as usual. Obviously, today's the 1st of October. Maybe in 30 days we can have a follow-up and I'll be giving you completely different information, but as of right now, business as usual.
Amazing. I love it. Now, if somebody wanted to do a loan, or somebody wanted to get in contact with you, or somebody had some questions, what's the best way for them to do that?
Social media is at Silver Mortgage Group, and a phone number is 805-479-9283. We're located here in Camarillo, California. We service the whole state of California and other states, depending on where you're at. So if you have any questions, any concerns, please feel free to call that number, 805-479-9283, or follow us at Instagram and TikTok at Silver Mortgage Group. We'll be more than happy to provide, any additional information and, more videos to come on this subject. But, I hope this helps, consumers, and it also helps agents and other loan officers not panic, keep moving forward. The process, it's a little bit out of our hands, and it will resolve, God willing. Everything will be moving forward, and business is gonna just continue as normal.
I love it. Well, Silverio, I wanted to say thank you so much for taking the time to be on the podcast. To our viewers, if you've enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode will be helpful, make sure to hit that share button. Thank you to our viewers, and Silverio, until next time.